Hey everybody, we wanted to talk about a subsector that's been incredibly hot lately, and that is home builders. And then specifically, we wanted to break down a stock, Toll Brothers, to show you what's going on in that subsector right now. Taking a look at what's happened to Toll Brothers over the last few years, back here in 2020 on the low, if you had bought this sub $20, you could have made, and held it to now, you could have made 9.6x your money, right? Really strong move here from low to high. And then even in the 2023 low area, you could have made 114%. That's the past, however. Let's take a look at whether Toll Brothers is good to buy now and hold into the future. One thing you need to know about home builders is that they do not carry a very high PE. Market PE in the S&P right now is about 20x. Here at the top, Toll Brothers only carried an 11x PE. Now let's take a look at the bottom. Sub 4 PE in the high 3 PEs. Now why would a stock like this carry such a low PE? Well, mainly because the market thinks that the E is wrong, meaning they think the E is going to go down. Here in late 2022, we thought we were going to raise rates substantially, which we did, and we thought that that was going to kill the home builders, right, essentially. The difference was, though, is that the E did not change even close to what the market was pricing in. Let's go back to 2020 to look at what was going on here at Toll Brothers here, right? So take a look at enterprise value here. You've got an $8 billion company. They're doing about $7 billion in revenue, and the profit margins are pretty decent here. EBITDA margin 10%, net income margin about 7%, and they're turning it into just under $1 billion in free cash flow. Pretty well-run company, right? Now let's jump forward here to 2024. As you can see, the sales have gone up substantially, but they've only gone up about 30% from 2020 to 2024. However, what has gone up substantially are the profit margins. The EBITDA margin jumped from 10 to 21. The net income margin dropped from 7 to 14, and free cash flow jumped a little bit here. But what really jumped, what really exploded here was earnings per share. Current earnings per share here, $13.67 up from $3.74. That is almost a 4x of EPS. So what they did was they took a little bit more in revenue, a lot more in profit margins, and then they bought back stock with all that extra cash that they had. Now, what do we think of this stock in the future, however? Well, we saw that smile curve of PE, right? 11 is near the high, 4 was in the low, and it's back to 11. So we don't think there's a really good chance that Toll Brothers or home builders in general are going to re-rate higher. So if you can't re-rate higher, then you need earnings per share to go higher, which the model has here. However, what the model doesn't have is any stress on profit margins whatsoever. It doesn't think we're going to go back to old profit margins. It thinks we're going to keep these really high profit margins, and I think that's where the market might be wrong. Where interest rates go lower, all the existing homeowners, that supply is going to come back on the market. These home builders for new homes are going to have a really hard time, I think, going and against the existing home class that comes out essentially, and their profit margins probably aren't going to jump the way that they did in 2020. So if you've got lower or similar profit margins, if you've got a lot of supply that's competing with you essentially, even though you have lower rates and you can't re-rate higher, there's a lot that's working against these stocks up here at these higher prices. That's it from us. Hit us if you have any questions. Hit us on the socials. If there's any names that you're interested in, please look us up. Happy to help.